All right, well, welcome everybody back to the beginning of a new year, 2022. So glad to be back on with after about a week off or so. Markets are kind of sideways, not really moving very much over the holiday week. So good time to step away from the markets and be able to renew and recharge and start the new year on with a little bit of a bang. So we're going to take a look at today's move to see how much of it was just kind of a snapback from what we saw going into the end of the year, or whether it actually is kind of a breakout move. So we're going to look at what the charts tell us. How bearish were we really that last week? We were kind of down a few days there at the end. Was it that bearish? Was it not? Was it bearish enough to produce this kind of bounce? So we're going to really break down the charts and the indicators to see what they're saying and see what they say going into the rest of the week. What kind of moves we expect we may see even as soon as tomorrow or the next day. We're also going to talk about there were a couple really big moves in the different asset classes. So we're going to break down what those were today and what they mean. Then we're going to look at today's trade idea of a stock that's been basing for a while that may be leading part of this charge that we saw today. So we'll talk about how to trade that, the kind of pattern it's had. So let's go ahead and get started. Today is Monday, January the 3rd, 2022. This is the market outlook from marketscholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator. You can see the market sentiment line is falling, but keep a grain of salt there. It's above 80. It's just pretty sideways over the last couple of weeks. The intermediate line is easily above 80. It's actually up above the 90th percentile. Very good, strong near-term run going into that holiday week. And then we just kind of stayed up at the high end of that range. And even today, pretty much stayed within most of the range. A little dip below last week's range there, but finished well inside of last week's range. With the momentum line jumping, again, the momentum in the near-term line dropped pretty sharply last week. Not necessarily because we had 3 out of 4 down days, but mainly because we had such big ranges here and then we had really small ranges after. So it was more a function of that than it was the fact that we were really bearish. And as you could see, we bounced back up and the near-term line's bouncing back up too. And so now the question is, where is that near-term line going to get to? We get up to new highs, we get a new near-term run, we keep this intermediate run running, which basically started over here, a little bit of a near-term drop there that obviously quickly recovered. So pretty much you can see if you were just to kind of keep going, that's what we have. Drop and dip, fast dip kind of just negates that. So, it was a couple of near-term dips, but not enough to get the intermediate line back into bearish territory and end this intermediate run. So this intermediate rally is pretty much still going on its, 3 near-term legs, and now we're starting a new 4th near-term leg, and we'll see how far that goes. We are 2.5%, more than 2.5% up above the 30-day moving average. The Russell 2000 now is more up above its moving average than it has been a long time, right? So, 2% now, all during the break, we're kind of flirting with it. We got well above it. Still like green shading and yellow line, but that's a good, strong move. That's a good indication that we could really kind of get going on the Russell, which we haven't. The S&P's been so bullish, but the Russell hasn't been. So it's a very good sign there. The intermediate line is out of bearish territory. That's what happened over the holiday. We got out of bearish territory, got above its market sentiment line, which is still falling. But you had a good, strong near-term run on that pre-holiday run. Good, strong near-term rally. A bearish pullback again with some long upper shadows and some relatively bigger ranges. A couple of days had some pretty big ranges. A couple of days didn't. And now we're bouncing back up. So now we'll see where this next near-term run is. Obviously, this would be a bullish near-term low point because it didn't get into oversold territory. It got in bearish territory, but not oversold, and it would be obviously corresponding to a much higher low point here. So we got some good opportunities here. We're on this bearish impulse move. Now we're retracing that bearish impulse move. There was some resistance at the 38. We're through that. Obviously, there's going to be some resistance here, and we don't start a new bullish impulse move until you break back above this 2383 level, this 78% retracement, and now we're back to a bullish trend again. So that's the Russell. Of course, the Nasdaq 100 looks very similar to the S&P. The difference is its intermediate line is not up above the 90th percentile. It actually did drop going into the end of the year and bounced up today, but not above those highs. So its intermediate line is in this precarious position here, producing what would be a pretty bearish intermediate peak, right? Because we obviously had the intermediate pullback with the intermediate line getting below 40, dark pink shading in a red line, even if only for a few days. But by definition, that would be your intermediate pullback there. We obviously dropped below the 23% retracement. We didn't, start a new bearish impulse move, so we're still, this would be a new bullish impulse move to the upside. But if we don't get going, we're above the 23%. But if we don't get that intermediate line up above the 80 and really kind of get going, then that could be a pretty bearish new intermediate peak, very short term. So, very important new near-term run this week if we get one started. Good start to today, but it was mainly just a bounce back today from really oversold short-term levels on the S&P, on the NASDAQ, on the Russell 2000. So we had some really oversold short-term levels, and today erased that. So today wasn't really like a bullish move. It was more of a bounce back. From a oversold technical, mainly again because of small ranges, but still downward momentum going into the end of the year, and then today. So now, do we follow through on today and build on it, or was that all it's going to be? It's just a bounce back move, and that's something we want to keep an eye on. I'm leaning more towards this idea that a lot of these are bullish near-term lows, and that will bounce back up to new bullish near-term highs and keep this intermediate run going. As of right now, right? Of course, let's take a look at some of these other charts here and see how they confirm that or not. If you see the S&P 500, we are, good bullish. The last week's Hakunashi candle closed above all those highs. So very, very bullish weekly candle, positive differential, rising PPO. So bullish trend there. The Russell 2000 has not been on a bullish trend until this week. Look at that green arrow. You can barely see it because it's kind of mixed in here, but you had these bearish candles. We had a bullish candle last week, Hakunashi candle. We're back to a positive differential. The PPO is slightly rising. We're back to a green arrow. So, some good opportunities here for the Russell to start a new bullish move here. The NASDAQ also had that green arrow a couple weeks ago. Last week, good bullish Hakunashi close above those highs. So, we'll see that so far, this candle for this week is not that bullish. I mean, it's got positive differential, slightly rising PPO. But, again, we need to see if we'll close up above last week's high or not on the Hakunashi. That's the million-dollar question, right? Let's take a look at the MACD and stochastics indicators. There's your 3 green arrows on all of these, right? They all have 3 green arrows right now. The histogram is following those. So there's your near-term pullback. It's brought the near-term line down. So we'll see if that histogram turns back up like you see the Russell 2000 has. Again, that's why I kind of lean towards that direction. If you break those indicators out, the S&P is above its 8-day moving average. The NASDAQ 100 back above its 8-day moving average. The 8's above the 17. They're both above the 30. So very good patterns here, right? And if you look at the Russell 2000, here we are for the first time in a while getting back above the 200-day moving average. Now, we're not back above the 50 yet. We kind of held that for the high today, and we filled in the gap. So if we break through that gap, then you can see how bullish that can really make us. So you see the 8's already crossed the 30, so is the 17. We have the opportunity for new bullish divergence here to occur as we're crossing up above zero to really get going, for the MACD to really get going, the blue line here to get going to a new high point, a good thrust to start a new intermediate run. Not a whole lot of volume. You can see the volume. Obviously, last week's volume was really light because of the holiday. So you'd think today we'd get back to normal, and today we didn't get back to normal. We were still, a little bit more than what we had, but that's a little bit more than what we had on, what was that, New Year's Eve? So not a lot of volume here. That's why, this is a little concern on the bounce back. I'm not fully sold in, but I'm leaning that direction. Just not fully bought in yet to, like today being a breakout move like you hear from a lot of people. S&P 500 above 30 on the DMI positive, almost below 20 on the negative, so a good sign there. IWM above 25 now on the positive, but we're just kind of testing it. So if we can get above it and stay above it, great. But we're just kind of like just right there. Are we going to actually do this? We need some follow through. We really need some follow through on the Russell to feel really confident about this new bullish move, even if we are leaning in that direction. Let's take a look at the RSI and the CCI. I mean, these have been so bearish for so long on the Russell 2000. We're flirting, we're above 50. We're not quite above 60 and bullish. We're above 0, but not quite above 100 and bullish. So we're kind of flirting with being bullish, but not quite there yet. You can see SPX, however, is still bullish, right? We have been above 100, and we just pulled back, and we are above 60 in the NASDAQ 100. Kind of similar. We're not quite up above 60 yet, but we have been, and so it's a little bit more bullish than the Russell, not as bullish as the S&P 500. The Bollinger Bands, we are back in the upper quartile, pushing up against the upper end of the value area on the Russell 2000, on the S&P 500. The Qs, we are close to the upper quartile, not quite. And then, of course, what we've been so bearish here, but now we're pushing up against and potentially breaking out into that upper quartile here too. So really, really important day tomorrow to see how we follow through on this rally. Because if we can build on it, great. We have a good opportunity to get going. Oh, I forgot to show you the Ichimoku cloud. So the S&P, of course, well up above its cloud, and you have a an intermediate trend forming above 65, above 2. Hence another reason why we're leaning that direction. IWM had been bearish, and now we're not, and we're above that blue line, and we're staying above the blue line to the point where the green line is crossing above. We're still below the cloud. The price is still below the the red line. We're still lower than we were 26 days ago. But if we can hold up here and build on this, the red line is going to cross up above as early as tomorrow and get into that gap. So we could be pretty bullish here pretty quickly. Let's take a look at the intraday moves, and you can see how we stayed in there. There's last week's range, really tight. Last week's range, not surprising. And then you can see Friday's range was really tight. So we had an outside day today on the S&P, but still inside of last week's range. So it's not breakout. We're not really breaking out there. IWM, we kind of did at the beginning of the day, tried to get up above. Even got a new 4-week high for the first time in forever, right? The Arun indicator here, you can see we hit 100. That's very good to get up above 100. Again, that's usually the start of a new bullish rally. So very, very good sign from that perspective. Where did we go? Right here, but we didn't. Oh, excuse me. Go back to IWM. But we didn't close up above last week's high. So we did close above yesterday's high, just like the S&P, but we didn't close above last week's high. So you'd like to see us break out of that, and then we can really get going to the upside. If you look at again, I told you that the volume and the trading range, you can see the ranges have been so small. We had 2.75, 2.64, 3.33, 2.19. The average is at 5.55. Today's a little bit bigger, but still below that average at 4 points. And the volume a little bit higher, but still below average at 72 million. So put those numbers into context, and this has been falling because of the holiday here. But when you put those numbers into context, 4 points is well below that average. 72 million is down here too, below that average. So these numbers are really falling, but again, mainly falling because of the holiday week. So we're probably going to need a good breakout range, like a good 6.5 point range with 100 million shares trading to start this, to build on what we have today, to kind of break us out of this small range sideways move, holiday move. Then you could feel good about a good January run, a good intermediate run starting here. So that's the kind of move we'd be looking for, again, as early as tomorrow. The problem with that kind of move is you can see the VIX got really low over the holidays, and it stayed low today, and it's extremely low. So it's down here near to the 75th percent, or well below the 80%. It's hard for the VIX to drop on an absolute basis when it's already that extremely low on a relative basis. So again, it's gonna be hard to build on. That's why you kind of need a breakout move, because you really need to break through this. It's gonna be hard to build on this bounce back today with a good impulse move if we can't get the VIX to really drop because it's already so extremely low. We might just kind of grind, and we'll see how that plays out. But again, if we can kind of break out, even with the VIX kind of already low here, then the VIX can bounce back up here and we can move back to these highs from the holiday week and still be bullish, right? So if we had a good breakout move. Otherwise, we grind. It's going to be hard for that to hold when this VIX does bounce back up, because it will bounce back up to at least 85, if not up to 90. And when it does, how far does the S&P fall, right? If we have a good breakout move before that, then it will fall back to these old highs. But if it just grinds, then it has a potential of breaking below the last week's lows. We don't want that, because that would be a little bit too bearish maybe on the short-term sentiment. So what do you think? Do you agree with that assessment? Do you disagree? Let me know in the comment section below, especially if you disagree. What charts or indicators are you looking at that would suggest why you're a lot more bullish than I am, or that you're probably more bearish than I am right now? So share with what you're looking at down in the comment section down below. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube that notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. You liked our video today, and you want us to do another video again tomorrow. Quick way to give us feedback if you like our stuff. Of course, if you don't like our stuff, you don't have to click on anything. But if you do like it and you want to let us know, one click is all it takes. It goes a long way for us. We really appreciate it. Also, while you're down there, comment. What did you get out of the video today? What stood out to you? What questions or comments do you have? Post those in the comment section below. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content between the videos from day to day. There's my handle at DavidSettle42. And join our Market Outlook Facebook group that we've created. Alright, if you're watching us here on our blog, come over here on the right and check out some of these things over here on the right. If you click on this icon right here in the Market Outlook Live button, it takes you to this page. This is where I do the Market Outlook live videos. I do them on the same days I do the Market Outlooks. I do them at 3:30 Eastern Time on this page. It's done live here, so you can come here to check it out. I review all the trades we've done in old videos. We actually closed a couple today. You can see why. We also talked about why we stay in others, what we're looking for. We talk about trade management there. We also put on today's trade idea that you'll hear at the end of the video already here and during this live video, so you can kind of get into that trade before the market closes there. So that's something to check out. There's all the old archives on this page. You can also get to it by clicking up here to Market Outlook and then go down to Market Outlook Live. You can see our upcoming classes. Click on View More. That takes you to our calendar. You can also get to this calendar by clicking on Trading Rooms up here in this main menu. You can see all of our upcoming classes for 2022 for this month, January 2022. Come down here, click on that heart. It opens up this tab. Hit that like button. Click on that thumbs up icon. Opens up a new tab. Click on that like button. Again, the more you do that, it really helps get all of our content out to all of our followers. It reaches more people when it has more engagements, like thumbs ups, like comments, like shares. Right, so it really helps us out there when you get that. When you click on that, you can do that right now even while you're watching. All right, now let's take a look at what's driving this price action. Look at this big gap that formed over the holidays. The S&P and the NASDAQ really took off with real estate, but you can see everything else kind of flat, and emerging markets kind of bouncing. Small caps bouncing from pretty oversold levels. So it's kind of interesting to see how that came through to the end of the holidays. If we just look at just how things performed today, small caps started the day really strong. Pulled back some at the end. S&P was actually negative briefly here towards the close of the European session, and then we just kind of grinded higher into the close. IWM, the Qs, both strong. Bonds way down. That's a sharp drop in bonds. You'll see that here in a second. Big sharp drop in bonds today. Gold was down significantly. Let me just show you really quickly the holiday week. As the holiday week closed and what it looked like coming into the week. So you can see bonds were down for most of this week here, and you can see stocks were pretty strong. Small caps maybe not so much. A lot of these kind of closing at the lows here. Gold was up, real estate was up, long-term bonds down a little bit, the dollar was down. So that's the context going into what you saw today, and today was a pretty significant gap or gap too, but gold stayed with the gap. Real estate kind of bounced back up, but bonds really dropped hard and the dollar took off. So let's take a look at these charts. Let's start off by taking a look at the, let's look at this chart here. No, excuse me, this one here. And let's look at the Euro US dollar, which makes up 60% of the dollar index. Look at that rally. So we had been converging, bullish convergence, finally getting above the 17-day. So little bullish divergence going on here, just filling in the gap between the 30 and the 50. And boy, did we hit that 50 hard and came back down. Now we're not back down below, like we're down to below the 17 for a day. We're not back below the 30, so we're still in this gap between the 30 and the 50. So we're not. I wouldn't necessarily, the euro is not dead here. Here's the dollar index. You can see it hit off of its 50 again, back up to its 30. It looks. I mean, there's some opportunity, a lot of volume. There's an opportunity here. Let's see what happens, right? Let's see if this is just a one-day phenomenon, kind of a bounce back from a holiday week where we were down, or is this a new thing, a new breakout type move? Here's that big move on bonds. Look at that. Bonds dropping hard. They were already breaking down below the 30 and the 50 on the holiday week, right? Getting below the 17-day. We were in this bearish convergence, bullish convergence, turning into a bearish divergence over the holiday. And then today, boom, breaking hard again below the 200. So again, we filled in the gap between the 50 and the 200 here. Is that all we're doing? Is this just a little token drop below the 200 and we'll just bounce right off of this? Or are we going to extend below here and get a new death, to the point where we get a death cross going again? So lots of volume. Remember, not so much volume on equities, a lot of volume here on TLT, a lot of volume on the dollar index. Here's gold, right? We looked at gold. Gold broke out again going into the end of the year. Big drop today. But again, basically just a drop back down to the 30 and to the 50 and to the 200 and to the 30. I mean, they were all right here. All these lines are right here within the range. So we can't really say yet that we're really breaking through. We had a good move on the holiday, but it was all light volume. Not a lot of volume here on the GLD going into today. So it kind of basically we just kind of nullified a light volume holiday quote unquote breakout, and we're back to where we were, where we've converged to the point where all these lines are basically sitting right on top of each other, right around the point of control, centered on this point of control inside the 1 year value area. And we're not trending in either direction yet, one way or the other. Let's look at these big global markets here. Let's look at the 12 grid for all the bigger markets, for the ETFs for these bigger markets. Still some dark pink shading, especially in these Asian areas. China, Japan, Russia, Brazil's not looking so hot. South Korea's not looking too good. The developed markets, though, have really broken out. They had a good holiday week. They followed through today. They're all well above their moving averages. They're kind of following the tune of the U.S. Emerging markets, not so much. A little bit in India. But these developed markets are looking really good, finally, for the first time, again, in a while. Let's take a look now at how the sectors have performed here today. The U.S. sector. So we'll come down here to the comparison chart. You can see what it looked like going in the last 3 months, and we'll just look at here today, and you can see, look at that breakout there on XLRE. Energy finished today really strong. Discretionary finished today really strong. Communication services, not so much. Or this is a week. This is the holiday week going into today. That was the move going into today for the holiday week. Real estate, utilities, what else? Materials was up there. Staples was up there. Industrials. All of these kind of safe haven, semi-cyclical stocks doing. So that was going into today. Now let's look at today. There we go. Energy and discretionary, really big movers, and all those safety trades that that were so bullish going into the end of the year. A little bit of a pullback along with industrials and materials there. And there's financials doing pretty well, technology. This is what their 12 grid chart looks like here. 12 grid on the sectors right there. So there's XLY, XLK, kind of looks like those developed market charts. XLC kind of looks like India's chart there. But look at like that engulfing pattern on industrials. Look at that engulfing pattern on materials. Look at these bearish candles on utilities and real estate, and staples getting a overbought cluster there. Healthcare not looking so strong. Energy with a good breakout move here. Financials getting up above its moving average, kind of looking like the Russell 2000. So not really. Again, it's kind of confirming this idea that today was a good bounce back, but not a good punch through, not a good impulse, thrust move that we can build off of. And that very well may come tomorrow. And ideally, it would either come tomorrow or Wednesday if we're going to really start this new intermediate run, this new year off on a new intermediate run, a good strong near-term rally that will sustain this intermediate run that we're kind of getting on here from a broader market standpoint. All right, now let's take a look at our trade idea of the day. Let's take a look at PayPal. Let me pull up PayPal here. PayPal, a lot of these financial processing companies had a really good day after kind of a bad day to end of the year, but still sideways. Nice little breakout move, closing above a lot of these high points from last week. The momentum line jumping up almost into overbought territory. The intermediate line has been rising as we've been basing here. We've been so bearish to all these clusters, but then we finally got out of the reversal zone here during the holiday week, and we followed and we kind of confirmed it with today's move. The near-term line kind of forming this bearish near-term or bullish near-term low point because it dropped into bearish territory but not into the lower reversal zone. In fact, the last two did not drop into the lower reversal zone. So a good opportunity there. For PayPal, you can see it has 3 green arrows here, 1 MACD over here, 2, and then stochastics there 3. You can see what it looks like with the volume kicking in, not quite above average, but above where it has been for the past few weeks or so. When you look at the 2-line version of this chart, you can see we really broke out. Again, the 8-day and 17-day moving averages were already above the 30, but we had broken back down below the 17-day on the last day of the year, but then reversed that and then some today. So looking like we might be starting a new bullish divergence here with that MACD starting to take off up above them. The MACD is positive now. The blue line's crossed above 0. And we have a nice good gap of volume to fill in, and a gap to fill in to get to the 50, a gap to fill in above that to get to the 200. So really good opportunity from that perspective. If you take a look at some of these oscillators that had been so bearish, now not so bearish, right? PayPal had been so bearish, so parabolic, and now not so much, right? Both lines are between 25 and 20. And the positive is up to its highest level it's been in a while, and poised, you got the crossover here, and it's poised to go over above 25 for the first time in a while. You look at the CCI getting above 100, the RSI getting above 50, so opportunity for some bullishness to come into these oscillators. When you look at the trend strength indicators, we have been so bearish, now not so much, right? All the way to 0 or above that blue line and staying. There's some room to fill in to get up to that gap there. If you take a look at the Bollinger Bands, you can see a break into the upper quartile, just barely, but up into the upper quartile. So now we'll see if we follow through with this with a breakout move up to the upside. So, one more thing. Let's take a look at the weekly chart. The Hakunashi candles here, the weekly Hakunashi candles. You can see we had been so bearish, and now we have a PPO that's very low that's starting to rise, the positive differential, and a little bit of a bullish candle forming. These last weeks, after a few transition candles here, the opportunity for something to change on PayPal and at least fill in that gap up there. So the trade that we decided to do was we'd come over here and do a long call vertical spread up to that 220 level. So selling the 220, buying the 210. So a little bit out of the money. It's that first strike below 40 on the delta. Buy that call option. Sell the 220 call to reduce the cost of the trade. And then we position size for a couple contracts here so that we can keep my loss half of what my normal losses are, because it's kind of a speculative move, directional move. And you can see now if we get up to that 220 level, then I get about 3 times the reward for the risk I'm taking all the way through to that February expiration date. If we can get up into that gap of volume here and fill it up to the top of that. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen that takes you to our Market Outlook forums. Open up any new thread with any questions or comments you have. Reply to anybody else's threads, and let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel as well as our website at marketscholars.com. Click that thumbs up icon. Like us on Twitter and Facebook as well. Comment on the video. Have a great rest of your Monday night, everybody, and we'll see you all next time.